Are home prices dropping? The truth of the housing market. Are we in a housing price decline? It is not confirmed what the year-end will bring, but the home market is not at an all-time high. The supply has stayed the same, but the demand has lowered tremendously. The reason for the low prices is because many people have shifted from the pandemic-fueled demand. Price cuts from realtors have made new homeowners excited. For those who have investments in real estate, it might not be the best time. The rush to own homes for a lockdown has died down. There are price cuts everywhere. We will also touch on those states who are not experiencing the price cuts. There is an expectation that we will see those states drop prices early next year, but for now, they are benefiting from what realtors call a bubble. We will get into that in a moment, but let's take it back to the beginning. There is a higher mortgage interest rate now than there was a year ago, yet the prices of houses are not affordable. That is what is preventing people from buying houses. Realtors need to examine their data and answer why fewer people are buying homes although prices are coming down. The percentage for mortgages was spiked by a quarter as of June. While the stretch with home prices may have people chokehold, they cannot take out excessive mortgages. Considering that millennials are buying homes now, and they have less money than any generation at their age. The truth of the housing market, as we have summarized, is that there is a housing crash already happening. Many realtors have cut down prices 10 times than last year in places like Idaho and Texas. What this means to a real estate investor is that it is time to buy property. With the desperation of the real estate agents, you will get the best deals in places where the market has gone down. That way, you will be sure to hold on to the property and flip it once the market is back to being stable. There is another angle. Although the prices are meager now, they could go lower. There is potential for the market to drop as low as 40% more. Another interesting fact is that once people see these price cuts, they will rush to buy. So more houses are going to be listed as second ownerships and investor homes. The houses will have a higher value than now, but the market price will still be favorable to you. Those in the Southeast, like Florida, who haven't been affected by the crash yet should wait. There is currently no justification for buying a house there because it does not have enough inventory. You have to wait it out for a while until the price cuts start. The price cuts and inventory increase on the opposite side could take till 6 months. Be patient and wait it out a little. The market in those places is going to rebalance themselves after a while. The seller's market will not last in those places for long. Now let's break the price cuts down to regions, shall we? During the pandemic, many people left the West Coast. As we know, places like San Francisco and Los Angeles are habited by people with dreams of becoming famous. They are cities where people travel to for a better life. So, in essence, when people get tired of city life and want to go home, they migrate across the country. That is what caused the major shift to the other side. People who left the West Coast traveled to other parts like Austin, Salt Lake, Boise, and Stockton. These people from LA and San Francisco had so much money to spend that they disrupted these markets with high demand. That was what shot the prices of these places up. They were now selling to Californians who are used to a volatile market. So the inward migration swept up the market for the times. But past early 2021, the inward migration slowed down. People were no longer moving from California as much. So now the high prices set for homes since mid-2020 have to be supported by the locals in these cities. Since the locals do not have as much money, the prices will have to go all the way down. But does that mean that California is having a good time through the crash? LA is one of the places where home prices seem never to go down. The market has been solid in the last few years that people forget the harsh reality of 2012. The market fell between 35 to 50% across the whole of LA, and that could always repeat itself. However, LA prices are at an all-time high right now. Homes are average $837,000. So for investments, it is a good idea to go back to parts of California before there is another surge in the process due to migration. LA has the most volatile market in the U.S. The prices can go up and down as many times as it likes. Some housing experts and economists have referred to this as a settling down. They say that the price surge last year until June was abnormal, and these new prices are houses returning to normal equilibrium. The statistics show that single-family homes, townhomes, condos, and co-ops have fallen by 2%. Yet the overall sales are 16% higher than 2020. The median price of a home in the U.S. is $356,700. That is a 14.9% increase from the median of 2020. It must be mentioned that 14.9% is not standard. An increase at most should fall within 3 to 5%. As discussed, it is abnormal. Let's also tell you that it is a bit number compared to some months within the middle of 2021. We saw 20% price growth in 2021, so even 14.9% is a reduction. As prices rose in August, sales dropped. There are buyers in the system, but they are not under pressure like they were last year. So they have settled down and decided to wait for more inventory in the market. Currently, the market has 1.29 million unsold homes. That shows that the market is not fully balanced. A balanced market will have at least 2.6 million homes on sale at any given time. Some people might fail to mention that analysis with 2020 could not be the best bet. Last year, the pandemic shut down the market entirely in the first half. And then, when it opened up in the second half, a pent-up demand swept off through then. Mind you, the second half is often the calmer half of the year. So as 2020 data is not the best to gauge, let's turn our attention to 2019. In the same line, price cuts of 2020 were around July to August and then started leveling up in October. So maybe we are repeating the trend of 2019. So what does this mean for the markets? Are they buyers' markets or sellers' markets? According to the National Association of Realtors, the 2021 market is going in favor of buyers. The homes that are listed are selling in 14 days. The average homes are selling in a month, while inventory is at a historic low. As we have mentioned, the gap is closing. September saw some weather disruptions that lowered the year-over-year listing. As the peak season of price increase has passed, prices are dropping in single digits. The new sellers are also pricing competitively. The new houses are coming at a higher cost due to an increase in construction costs. It is becoming impossible for builders to create affordable houses. The post-pandemic economy has left a shortage in labor, appliances, and equipment. Although the situation is light, it is a reminder of the recession 15 years ago. The Great Recession was caused by low interest rates, loose mortgages, and a national shift to homeownership. In those times, the biggest crash saw 9 million families go homeless. Homelessness was a result of a foreclosure. The homeowners also lost $7 trillion collectively. Even as we have lessons from these ties, inevitably, this period will not be as shattering as the last time. There have been points raised that we are experiencing a demand and supply crisis, and not a bubble or crash as we have prescribed. The analysis is based on the fact that America is missing 5 million homes. The inventory numbers that we talked about throughout the video are not crises that started in 2021. Due to underbuilding and too much emphasis on flipping, America is backed by 5 million homes. And while these homes remain unaccounted for by builders, we will continue to see what we call a crash each year between July and October. Although cities like Austin, Boise, Nashville, and Provo are building more, there has been a massive decline in Midwest, Detroit, Chicago, and California. What do you expect for 2022? The market is expected to cool off. The following year is going to have a stock market. As more houses come onto the market, there will be more options and less competition per house. The market will see newer buildings and stability in the migration statistics. What are your significant worries about a market crash in the U.S.? Which areas are you looking to invest in when real estate cools off? Please share your thoughts with us in the comments below.